Space, the final frontier. Final investment.
Welcome back to the channel, everyone. I am Skylar James, and today we're gonna find out if Cathie Wood's new space ETF is a good investment or if she's just spaced out. This is her much anticipated ARKX Space Exploration and Innovation ETF. She is the most famous woman in investing. Her other ETFs delivered massive returns in 2020. She's been called a futurist, an identifier of disruption, and the new Warren Buffett. When she makes a move, the investing world listens. They don't always agree, but they do listen. When she told us she would usher our portfolios into the stratosphere, I got excited. You probably did too. In this video, we'll go over what is in ARKX, what is not in ARKX, and is it worth owning today? We've been told in recent years that the space economy is emerging, whether it be the privately held SpaceX, making headlines with their $70 billion valuation, or the publicly held Virgin Galactic breaking the SPAC dam and flooding us with wonderful undervetted companies to speculate on. As investors, it hasn't been easy to access pure play space companies. There's a handful of names you can hold individually, like Virgin Galactic, maybe a Boeing, Northrop Grumman has exposure to it. But what's out there that I don't know about? Without further ado, here are Cathie Wood's top 10 space plays. Several defense contractors made the top 10. No surprise there, they have decades of tax-funded aerospace know-how behind them. How about Trimble? They are widely accepted as a space play already. They use satellites to interact with ground-level construction and agricultural operations. And they also have a library of proprietary sensors. You can think of them as technology that reduces waste and reduces error, facilitated by satellites, kind of hybridized with Internet of Things. What else? Iridium? Okay, satellites, very practical. So far, so good. Otherwise, let's see. Okay, there's the ARK 3D printing ETF. That's a good decision. I think it happens to contain Trimble also, so there's a little bit of duplicate, but no big deal. The logistics of building in space or building for space, anything away from Earth, would be simpler if just a few materials could be printed into any form. I like this inclusion by ARK. Komatsu, the construction equipment company, they make one of the biggest bulldozers in the world. I think they have a Humvee for Japan's Defense Force. What's the angle here? Let's come back to this one. JD.com, the Chinese e-commerce site. Many investors already have exposure to JD and broad, large cap ETFs. This again feels like an odd pick to me. Let's come back to this one as well. Since the ETF is costing a whopping 0.75% management fee annually, we definitely want to look at more than just the top 10 holdings. Let's cherry pick just a few from the full holdings. Just looking to get a sense what's all in there. You want to know your holdings, especially when they're costing you 3/4 of a point. Virgin Galactic all the way down at number 20. Okay, they're definitely a space play, but they're pre-revenue, which makes them kind of risky, so maybe ARK wants to wait for them to prove themselves a bit before taking a larger position. How about Airbus, Garmin? Okay, relevant. Spirit Aerosystems, also relevant. There's several AutoCAD and 3D imaging plays on here. Autodesk, I can make a case for those being good fits too. You might be asking, Skylar, why wouldn't these be good fits? They're in the Space Exploration ETF, and Cathie Wood picked them. That's reasonable to think. Let me show you a couple of head scratchers. Raven and Deere, two agricultural hardware companies, tractors, implements, I think they see themselves as the future of agriculture with their GPS-guided agricultural machines, no drivers, controlled with precision from space in ground-based control centers. Think advanced GPS. And they're right, that is probably the future of industrial ag, which I guess makes them a reasonable ad, given satellites are assisting. Then again, it's tractors for farming on Earth. Deere has a $117 billion market cap already, not because of space exploration, but because of population of the planet grows by 6 figures a day, and we need to grow food for all of these new people. Space exploration isn't going to suddenly benefit them any more than the constantly increasing population is. Same could be said for Raven. These are advanced hardware manufacturers for ground-based operations. What else? Google, Nvidia, Amazon, and Netflix? Ooh, the big four. Instead of FANG, we have GAN, or NAG, or GANAN. Whatever you want to call them, they have something like an average market cap of $860 billion. They make up 2.5% of the market cap of the weighted S&P 500. Here, it represents over 10% of ARKX. I guess what I'm trying to say is these are big stocks you probably already have exposure to through the most vanilla of funds out there, S&P index funds. Why do they need to go in ARKX? 10.2% of their outrageously expensive 0.7% expense ratio is going towards allocations in the most basic of large cap stocks. Because they're going to benefit from increased broadband access globally? Guess who else is? Disney, eBay, Match, sportsbooks, Roku, and the list goes on and on. I just can't get behind ARK's decision to include these big cap stocks that are poised to have significant growth without the space economy. And then justifying their decision with roundabout reasoning makes no sense. Make no mistake, ARK isn't a charity, it's a business that makes money off everyone who buys their ETFs. When I'm paying for something, I typically have a higher expectation than if it's free. When I'm paying this much for something, about the highest tier of fees for any ETF out there, my expectations are lofty. International Space Station, lofty. Same for Alibaba. Yeah, maybe this means more people use Alipay as high-speed internet reaches more people. These new customers might also use Facebook or Snapchat, but Facebook and Snapchat are missing from this space ETF. So these large cap might benefit stocks are total fillers to me, and a thumbs up. Taiwan Semiconductor, same. Yes, broadband available more widely will generate more hardware revenue for semi companies. Nvidia, same thing. Smartphone sales, Internet of Things, autonomous driving, each of these is driving their growth. How do you justify only some semiconductor companies over others? Why not Applied Materials or Lam Research? The point is, these large cap and mega cap names are growing irrespective of their presence in outer space, at least as of 2020. But why pay a high fee for Cathie Wood and ARK to babysit them for me? Where are the pure plays within ARKX? Wait, before I forget, go way back to the beginning. Remember, JD.com and Komatsu in the top 10? How much do you want to bet that Komatsu, a construction vehicle manufacturer, is included in ARKX for the same reason as Deere? On JD, Cathie did an interview with ETF.com reasoning that JD is included because of their advanced logistics network and their cutting-edge drone research. You know, this feels awfully similar to Deere as well. Unless JD is moving all their warehouses to a spaceship at 120,000 feet and dropping down pairs of Nikes via drone, this feels like a bit of a stretch to me. So that's point number one. What's inside the ARKX ETF? Bunch of bloated, unneeded picks that overshadow the good and smart ones. Where is Maxar, a true pure play in the space economy. I've heard debates about whether Maxar is generally government funded and won't participate in the private space economy. I can't agree. There will be profit to be made. They already have the backbone to pull themselves to the civilian side, I think anyway. Supply and demand basics here. What else? Where are the SPACs for a pure space play like Momentous, or for a pure play like Rocket Labs? ARK has other SPACs in there. Why not these two bona fide pure plays? Where's Northrop Grumman? They've only been building rockets for 60 some years. In fact, subscribe to the channel. I will be posting my own space play portfolio picks in the next few weeks. I'll be going toe to toe with ARK and Cathie. No pressure at all. And look, to the point I wanted to inspect these holdings and judge if this was the right investment right now, and I'd say no, it isn't. 10% of the portfolio are these massive big cap stocks you already have exposure to for a much lower management fee, I'm sure. There are too many just maybe picks and still other holdings that are completely missing altogether. The lure of an ARK space ETF was that a specific question would be answered. What space plays has Cathie and ARK identified that I don't know about? She's got that 5-year out view on stocks. She certainly must have some tricks up her sleeve. Some surprises, please. NVIDIA? Baba? Cathie, you think we're surprised by Jack Ma? Maybe if recommended 7 years ago. So look, I'm staying away for now. I love the research that ARK does. We all love talking about them, even if we don't agree with their choices. They're part of what makes investing fun. And no doubt, we are in the early stages of space investing. I can only speculate, just like you, and just like them. But there's too many Swiss cheese moments where I'm trying to plug the holes in this portfolio. Subscribe and hit that like button so that you can catch the follow-up video where I will assemble a portfolio to take on ARKX and Cathie Wood. Thank you for joining.